Hi guys, it's time for Money Mondays, brought to you in partnership with Proven Wealth. Today I want to take some time to explain some of the things that are going on in the economy, like why all of a sudden it seems new buildings are going up everywhere. But first, let me give you your Wigton update. So last week Monday, I was expecting the lead broker Mayberry Investments to release the basis of allotment for the shares. And they did late in the evening, but it wasn't exactly what I was expecting. What they released didn't actually reveal any new information. It only reiterated that they're using a bottom-up basis of allotment. So basically, everybody will get the first 10,000 shares that you applied for. Whatever is left over, they're going to try to give everyone the next 10,000 applied for, and so on and so forth until all 11 billion shares are allocated. What I was hoping to get was how many applications in total have been submitted, which would give you a better idea how many shares you're likely to get out of what you applied for. ICinsider.com is reporting there are over 30,000 applications and more than 100% oversubscription. I can't verify those numbers, but I do find them to be a fairly reliable source. Anyway, moving right along. Today, I want to connect some dots for you and explain a bit what's been going on in the economy, specifically how Jamaica's lower debt rate connects directly to the country's stock market and construction booms. So just 5 years ago, Jamaica's debt to GDP ratio was 145%. So if you were Jamaica, it would mean you owed more for the year than you make in a year and a half. None of the big international lenders would lend Jamaica any money. So the government was mostly borrowing on the local market by issuing government bonds, or what they call government paper, at very high interest rates. We're talking mid-teens. So people with money in Jamaica, all they had to do to make more money was just buy government bonds. You're basically guaranteed 15–16% interest. They had no incentive to try to do anything else with their money, to get creative, open up new businesses, invest in the stock market, or buy real estate. Of course, I'm exaggerating. But government paper was just too easy and too lucrative, and it was crowding out everything else. But as the government's debt ratio started to fall, and international creditors realized, they're actually doing what they said they were going to do. They're sticking to fiscal discipline. Those capital markets and multilateral lending agencies like the IDB have slowly started opening up to Jamaica again. The government can get IDB loans now at 3 and 4%, for example, so they no longer have to issue government paper at very high interest rates. As a matter of fact, they started paying off some of those loans early, so that left the moneyed class with a lot of money all at once and nothing to do with it. When you hear people saying things like there's a lot of liquidity in the market right now, that's what they're talking about. Now, these money people, they aren't content to just sit on their money and be happy with it. No, that money needs to be put to good use to make more money. So they've started investing in stocks, investing in real estate, investing in new and expanding businesses. And it's no coincidence that these are the three avenues to wealth creation. And these three things also have a symbiotic relationship. Businesses are raising money on the stock market to expand. And as they do so, they need new real estate. It's no wonder unemployment is the lowest it's ever been in Jamaica's history. And a lot of this ties right back into the country's debt to GDP ratio, which is now below 100% this year for the first time in nearly 20 years. That's why this number is so important. Now, below 100%, we're at like 98% now. That's still a very high number. But if the country remains on this path, debt will be at a sustainable level in another 5 years. Imagine the potential that will unlock. It will free up so much money to do other things that was previously being used just to pay back debt. So for the small investors watching, take your cues from the big guys: real estate, entrepreneurship, and stocks. Those are the three keys to creating wealth. And of those three, stocks are the easiest to get into. The other takeaway: don't sit down on your money. Let your money work for you. So that's it for Money Mondays. I'm Kalilah. See you next week.